But let's focus in on the market texture. As we said yesterday, we did manage to gain quite a bit of traction. What started off as a lackluster day went on to end with quite a flourish above the 17,550 mark. Let's bring on board Nooresh Merani as well as Kunal Bothra, our chartists who joined in this morning. Kunal, let's get in your sense as to what the outlook is from an index level. Do you believe that we're likely to scale up from the 17,550 mark? And what's the expectation when it comes to banks in light of the policy?
Good morning, Avan. It's a very interesting set of data points, to look at, and it's very perplexing, frankly, because over the last 3 or 4 days, we've seen the Nifty and the Bank Nifty moving up, steadily higher. The Nifty scaling up some 650, 700 points. The Bank Nifty moving up by more than 1500 odd points from the 39,000, 39,500 levels. But the intriguing data point is that specifically over the last 2 or 3 trading sessions, we've seen a very sharp reduction in open interest. Now, I was flagging this off yesterday as well in the morning that the reduction in the Bank Nifty the day prior was almost 30% drop. Yesterday, the data indicates that there has been an additional 17% reduction in the open interest. We are almost at 91,000 contracts on the Bank Nifty futures, which is one of the lower OI, for the index at least over the last many weeks. So this is a bit, indicative that either the index is going through a major round of short covering, but that is not getting replicated with the kind of an extensive up move in the Bank Nifty. Like for example, yesterday the Bank Nifty underperformed. So even after a 17% short covering, the Bank Nifty ideally should have gone to a strong outperformance. So this indicates that this is more of a long unwinding which is happening on the index future. So this indicates that it's always better to stay stock specific in this kind of an environment. Maybe the markets are trading in a bit light going into the RBI policy event, and post the RBI policies where I believe the index would probably find a lot more trading action. So as of now, would remain light on the Bank Nifty, and action is more stock specific given the kind of data in terms of the open interest for the indices.
Nooresh, hi, morning. In good stead, we are back at 17,500 and a big event as well today, the RBI policy. What's on the cards?
So now we are getting into a period where one has to be stock specific. The bounce back, the target for the bounce back was 17,600. Once we crossed 17,200 and initiated a buy at 17,000, and today we go closer to that 17,600 mark. So that's the time to book profits and wait for a dip to re-enter longs. At 17,600, the risk reward now shifts more towards a stock specific trade. 17,800 is a major resistance in the near term. Same is the case with Bank Nifty. At 41,000, 41,200, 400 remains a major resistance. So time to now go stock specific instead of the index. So overall positive on the broader markets as well as the stocks, but on the Nifty we could see a bit of a pause for the next few sessions.